Hi everyone. Today we have a wonderful panel and even more wonderful panelists from my view. So I think let's do maybe a round of brief introductions. So to understand the audience, yeah, my name is Artemi. I'm leading institutional unit at P2P.org. P2P.org is one of the biggest staking providers in the world. Our TVL is roughly 7 billion. We provide staking services on major proof of stake networks, including of course, Ethereum, Solana, Polkadot, Ton, by the way, as the previous panelists. So, yeah, here we are. Let's move to Yam.
Hi, my name is Yamki. I'm the head of Asia for Circle. For those of you who are not familiar with Circle, we issue USDC and URC and a number of different various products. Thanks.
Hello, I'm Frank Mong. I'm the Chief Operating Officer of Nova Labs. We're the creators of Helium HNT token. Launched it about 5-6 years ago, and really happy to be here. And I'm a user of HSDC.
This is Sean. I'm partner at EVG. So we're a venture studio in Hong Kong, and we're a company that invests and build cool companies.
Hello, this is Kevin. I'm from CGV, which is a Japanese crypto fund. So besides we are working, we have a community in Japan and working with Sony, Docomo, these kind of big companies, and also we have a licensed stablecoin called JPYW, similar to JPYC. Yeah, yeah, we are running it at that time. So we also looking in Hong Kong. We also have like a corporation here. So yeah, nice to meet you, and glad to be here. Yeah.
Okay, let's start. So today we're talking about the adoption. So yeah, then the first question, an opening one would be, so crypto adoption has made progress, but let's admit we are still far from the mainstream use. So what biggest friction points do you see which stops us from the real mass adoption? Just Frank, maybe with you. So
I think and I've been at this for a long time, right? Like I said, we launched in 2019, and back then we launched the Helium network, and within a year and a half, we had 1 million hotspots across 180 countries, 80,000 cities. So the HNT token had a massive run in the previous cycle. I think mass adoption for us really means ease of use, the user experience, the user interface, the application. It has to be super easy and easy to understand. So that's really what we focus on. We focus on the app. We focus on the user experience for everyday people, average people, not technical, not crypto oriented. So we've taken that same mindset to Helium Mobile, which is a phone service in the United States and Mexico. And in that process, for us, it's not just easy, but you have to provide better value. So everyone here has a phone plan, right? Who's from Hong Kong here? Raise your hand. Oh, not many. Who's from Singapore? Okay, I guess everyone else is from other places, maybe China. But you have a phone plan. And that phone service is something you're used to. So if I say Helium Mobile has a new phone plan, and I want you to join us, I need to show you why, right? And so our approach is, I don't want to talk about crypto, but I'll show you the value of crypto. And the plan that we offer is free. You pay nothing. No tax, no gimmicks. I don't take your data. I don't sell it. But you get a free phone plan because crypto is powering it underneath that. That's how you get mass adoption.
Oh, okay, it's my turn. So I think there are a conversion funnel for mass adoption. So one is we do user acquisition from all the mainstream channels like TikTok, Twitter, all these social medias, Web2 medias. That's how we get new users. And the second channel will be we teach these new users to become crypto expert. So because we know that user will easily lose money when they first join crypto. That's me, right? I don't know the rest of you. So I will say that the current user acquisition model and the current user retention model is kind of broken. We see a lot of projects are doing a lot of stuff, right? So for example, I remember there are projects that help you to create new wallets and new on-chain transactions and on-chain TVL. So that's kind of like the retention part. We see that projects that help you to identify which KOLs has better mind shares, that's still the retention part. We see people who do like deepen or like TikTok growth hack. That's for the acquisition part. But I think these two are kind of broken right now. So we are willing to see if someone can actually solve that, because I believe that everyone here wants new user to make money in crypto, and not only PvP. That's how we can make the entire crypto economy grow. Yes.
Yeah, okay, so I just take some quick example for what stops us from making mass adoptions. The first one is I think it's because of the regulations, which is kind of slow behind our technical advance. So take Japan for example. So the regulations letting you giving you a license for payment. So they're letting you to having a kind of stable coins, but it will take 5 years to give you a license. And yeah, okay. And anyway, once you give the licenses, so you can recharge from Japanese yen to the stable coin. But however, you are not able to withdraw from the stable coin to Japanese yen. So this kind of stops the whole circles. So this makes no sense, right? So it's like you can use it for payment to like take the train or take a lot of things, but you cannot take it back to real cash. So people stop using it because of this. So that stops the mass adoptions. And besides that, also I think it's because of the capital is looking more into the infra side, infra layers, instead of the application levels. That's also because maybe the application level is not that smart and not that really profitable. But that also stops for people to by using application level applicants and then to starting use different tokens and cryptos. So I think that's kind of some of these reasons. Yeah.
I'll add a couple points, maybe to draw on some of the things that Frank and Kevin and Sean have talked about. I actually relate a lot to how you think about it in terms of the value. I kind of break it down to 3 areas. The first is trust, the second is distribution, and the third is UX, the user experience. The trust part, this industry is terrible at. It's absolutely awful, right? If we're totally honest, there are people in the room, in the know, that kind of gets what's going on and doing fine. When you walk out this door, most people down the street, the first thing they talk about with crypto is a scam, it's a fraud, etc. So we need to solve for that, and that's a combination of regulation, but also making sure that you're not doing pumping and dumping and losing people's money. Trust. Second piece, distribution. This is about how to get the product into the mass market, and this is a problem that actually any technology company, from Google to Facebook to others, have to really think about. And having a good idea that's in your head or in your app on your phone is okay, but you need to get it for a network to work. There's a tipping point. You need to get past that tipping point in order to get to the distribution. And once you get that network, it flips, and people are coming to the network as opposed to you trying to acquire the network. And then the third piece is UX. And this is the part about what is the user experience to quote unquote come on chain. No one in the world outside this room talk about coming on chain. People think about, does it work? When I turn on my phone, does it make phone calls? When I pay, does it actually reach the other person? If you have to do a bunch of steps to get there and learn a bunch of different terms, you've lost them. So it's got to be easy. It's got to be like a click and go. And this is the third part. I think actually a lot of companies around probably this room, certainly at Circle, that we're working on. I can talk a little bit more about that. But solving for that UX and making it easy for traditional enterprises, this is the distribution piece, to be able to actually onboard users easily through a trusted brand. That's the way I kind of think about it.
Okay, great points. Yeah, thanks, and great summary. So, I mean, with Sean and Frank, you touched DePIN, decentralized physical infrastructure, and I want to deep dive a little bit more on it. How do you see DePIN lowers the barriers for new users and specifically new businesses to enter the space?
Yeah, I think originally, if you are not familiar with Helium, our original problem statement and our mission was centered around we want to connect little sensors to the internet everywhere as cheaply as possible. So an example of that would be a little sensor that's outside tracking to see if there's fires or if the temperature is too hot or too cold. That data needs to get to the internet to get back to the owner somehow. It just doesn't exist. It's actually a very hard problem. And so we tried many ways to do this centrally. Build our own network, too expensive. In the United States, too big. And so we thought, how do we do this? In 2017, Bitcoin, Ethereum became very popular, more mainstream. And so we thought, well, maybe if we put Bitcoin mining inside of our wireless hotspots, maybe people will buy it, plug it in their home, and share their internet for Bitcoin. So that's really the initial kind of inspiration. And then we read the Filecoin white paper, really liked IPFS. And then because it was 2017, there was no real other chain options for us. We built our own layer one. And I think that process brought us to sort of this idea of if you can incentivize individuals correctly, they will do the work to build a network. And they'll own that network because they can mine a token, mine crypto as a result of that. That was sort of the thought process. That was the hypothesis. I mean, we got very lucky at the right time in the right place, and the thing took off. So we have a network. The next question really is, well, is it a better network? Is it available? Is it useful? So we prove the supply side on DePIN, but it's been I would say, a long road for us to prove the demand side on DePIN. And that's where the application, the product market fit becomes an exploration. It's like it's not clear in the very beginning. And that's why it's taken us 5-6 years to figure out, well, you have it in your hands. Everyone has one. It's your phone, your cell phone. You have 2. Some have 3, right? And that thing connects to the internet. You need that. I don't care who you are. You could, in the United States, you could be homeless, but you have a phone somehow. And so to us, that's where we thought we could add value. Because that phone costs money, and the connection to the internet costs money. But what if we can figure out how to use a decentralized network to give you that internet access and make the plan super cheap, super affordable? So that's the hypothesis we're executing on now. We have about 450,000 users every day connecting to the Helium network. They're passing through 50 terabytes of data, which is great. But our objective is to get to 1 to 2 petabytes of data to be very competitive with existing legacy systems. And so that's sort of the journey that we're on to figure out how to make DePIN really add value to the user today. Like everyone in this room, right? Until you're on a free Helium mobile plan, then you're not going to believe me that DePIN actually adds value. And I get that. But you'll get it eventually. I don't know where you're from or where you live, but I'll find you. And you'll have a free phone plan.
Yeah, so we didn't invest into a lot of DePIN projects, but I know Helium for a long time. I'm also from ICO. yeah. So I agree with Frank. I think like to make a DePIN project successful, PMF is super important, the demand side, right? So you need to use the DePIN product every day, because at the end of the day, the token is only a reward, right? And if you have more so one of the problem for DePIN is that to manufacture the phone costs quite a lot, right? So you need to have certain demand so you can lower the cost for your phone. So that's the biggest problem for DePIN. So you need to have a lot of demand for your product, or else like your product will be super expensive, and you're competing with like rest of others like Xiaomi and all kinds of like cheap products in the world. So, and token is a flywheel to help you to boost the demand, but it's not the solution. The solution is people needs to actually use your product. So we have some deep in investment, and we believe that okay, they have this flywheel, and they have a huge demand. So like instead of so phone is a very hard one because like produce a phone costs a lot. So it's awesome to hear that you guys have like more than like 100K like
We
phone.
run on any phone.
Yeah.
We're bring your own phone.
Oh.
You can use Xiaomi. It's fine.
Oh, that's
Yeah.
really cool.
It's even better.
Yeah, that's even better. Yeah. So you don't need to like manufacture. You don't need to produce your own phone. So that's like even smarter. Yeah. So for deepen product we invest, we make sure that they can have a lot of sales. If they cannot have a lot of sales, then we are not investing into this deepen product because there's no PNF. Yeah.
Awesome. So if we're talking about adoption, so we can't miss the topic of stable coins. Yeah, stable coins are like by far, I think, the most widely used consumer-facing product. So what's, in your opinion, driving adoption, but what is still missing in the end? And I'd like, of course, to hear Circle's position here.
So put it into context, right now there are $56.5 roughly billion of USDC. It's at an all-time high from a couple years back. What's masked behind all of that, though, was actually the activity and the way that it's being used. During the last build, there was a lot of crypto trading activity, kind of came back down. During this build, we actually see a lot more other use cases around store value, use of payments, all the real world stuff. And that actually gets quite interesting. We're now at almost $24 trillion worth of on-chain transactions of USDC. It's used in over 100 countries, and there are about 4 million wallets that are either using or holding USDC. And our view is that we've largely, we understand very well, at least in the crypto trading piece, kind of what drives adoption there and who the players are. What we are learning and getting better at are actually working with traditional enterprises who have that distribution and who are working with other businesses or individuals to enable adoption. So for example, here in Hong Kong, we are working with a company called Hong Kong Telecom. They have a Web3 wallet that actually is built by us, and they're creating loyalty programs off of that. We did the same thing with Grab. In the case of Brazil, with Nubank, they are using USDC to create a store value wallet for users who do not have access to dollars. They're able to get that. Here in Asia, we're working with a company called Tunes. This one's not to the consumer, but it's B2B, where they're using USDC to move money from west to east instantaneously. And they're moving millions of dollars a day for these cross-border payments. And they're moving it for companies like PayPal, Remitly, Western Union, MoneyGram, etc. To the user, they don't see it. But in the background, money is getting there faster, cheaper than they were before. There's less pre-funding for companies who used to have to park a lot of cash, especially for weekends, in these networks, to be able to move and pre-fund for the money over the weekend. So these are the ways that we're thinking about in terms of enabling the use and adoption of USDC. And I think the numbers that sort of speaking for itself.
Thank you. Any other points on stablecoin usage adoption?
I think one of the smartest things Circle did was, at least in the United States, is partner with Coinbase quite a bit. And that was my introduction to USDC, was Coinbase offered a higher yield on just putting USDC in the account. You earn 5%, 4.7%, or whatever, while if you put it in the bank, you get 1%. I mean, that's like, right there, you don't have to be smart with crypto, you don't have to be smart with technology, you just need to count the numbers. Like 5 is bigger than 1. Why am I leaving my money in the bank when I can move it to Coinbase or some other custody and I can get a return of 5% with no risk? And to me, that I think is one of the smartest move for crypto and Coinbase and USDC. I love it. I'm a user of it, so I love it.
Yeah, nice point. By the way, P2P.org launched stablecoin earning solution this quarter. So and the returns will be for some strategies even double digits. So it will
It's
drive
risky.
more.
It's riskier if you want, sure.
Yeah, it depends on risk appetite, but it will be flexible.
Yeah, those are not stable coins. Those are schemes.
In a way, but some of them are like one of the like lower risk profile. They're definitely like as safe as it possible.
I debate that. I mean, I'm from Circle, so we have a pretty strong position in terms of how we think about risk tolerance and what's backed one-to-one. And I think the regulations are moving in that way to define that. Now, I think it is good to see new stablecoins being created, but for those of us who's worked in financial services, there's a basic thing. There's no free lunch. You're taking risk in some way. Whether it is at a bank with the U.S. government or with a private issuer, somewhere along the line you're taking some risk. The question is, do we understand that risk? What's the counterparty risk? What's the FX risk? What's the duration risk? What's the liquidity risk? What's the settlement risk? There are a lot of this risk that I think the existing traditional financial system have made it all largely go away except for stress, like in an extreme stress situation. In the digital asset world, we just go through it like every other day. And I think that our risk tolerance is maybe higher, but for it to get to mass adoption, things have to work and people have to be able to trust it.
Yeah, I agree, definitely so. But I think investment in general equals risk. So it's always investment is always a risk, and of course it depends, on the risk profile, on the risk aversity, and I would agree that the U.S. companies are like less risk tolerant. Let's just say, but we are like targeting mostly like worldwide and some areas, specifically the APAC region. I think I'm sure this in this area, like even businesses like are ready to take more risks, reasonable risk. I'm not saying and if it's reasonable APR. So that's why what the product that we are delivering is strategies are adjustable. So it can be more risky one, it can be like a safer one, so it's depending on your risk profile.
But I think you started a term as investments have risk.
Yeah.
Investment and payment are two different things, and oftentimes we confuse and confound those, right? Yeah. When he thinks of a bank, he doesn't think of investment. Right. When he's putting money in a Coinbase for earning yields, that is not investment. Right. Right. Yes, you get some interest, but it's not. The purpose of that is not investment. Right. If you want to go invest, there are tons of options. Right. Please do. But I think it's a mistake to call stablecoins an investment.
Why so? Why so? Because
stablecoins.
Coinbase can go bankrupt tomorrow. Bank can go bankrupt. Even if countries can go bankrupt. So it happens. Of course, the risk is like lower than you like put your money to some 55% yield vault. But that's what I'm talking about. So I'm just like generalizing investment. I see your point. I agree with this.
But this morning, actually, like we have an internal meeting this morning, and we have a very interesting chart. So start from 2022, China owns U.S. debt, dropped from 1 trillion to 800 billion. And stablecoin company owns U.S. debt, actually grow to more than 200 billion. So, and we are said, this trend, they'll probably have an X cross very soon in 2 years of time. So it means that stablecoin companies are actually making U.S. debt much more liquid. It's true. And like make all these money much more liquid, and it's floating all around the world. So I think this is. I don't think it's a risk there, but I think it's much more regulated, and it's just making the U.S. debt market like super liquid, in a stable coin terms.
Yeah, I agree. I agree. So very nice discussion. I love how we spiced it up a little bit. But I think we
Everyone's falling asleep.
yeah.
End of the day.
We need to wrap it up a little bit. So let's do like a small lightning round. Just a question from me, just one sentence answer. So the first question is, if you're talking about adoption in 3 years, Ethereum or Solana, and why?
Okay, this is hard question for me actually, but I'll take Ethereum's because yesterday I had lunch with one of the bigger Ethereum's investor, Mr. Shenbo. So he's pretty much confident about the Ethereum's. He's saying like the road is still on track. It's on the same way, right? So what it's supposed to be, and okay, Solana is great, but it's still not yet reaching that level where Ethereum already passed. So probably Solana will still go through the same way again, right? So one time there is a depression and then going up. So anyhow, if that has to choose, I take Ethereum for sure. Yeah.
Okay, nice. Sean?
I will say short term probably Solana, but long term probably Ethereum, because short term people care about narratives more, right? If we think of like Solana's narrative is probably crypto Nasdaq to Wall Street, yeah. But we know that Ethereum tech is better, but Wall Street guys cannot tell, right? Like that's my opinion. Like it's hard to explain that why Ethereum tech is better. It's too hard, but yeah, so I would say like short term of time is probably this, and long term time is probably Ethereum. Yeah,
Solana. It's Solana, guys. Developers, massive community, massive go-to-market. Yes, there's like ebbs and flows and trends they've created, or not them, but the ecosystem has created. But I think if you look longer term, and that's why I'm a fan of Solana short term, but I'm a bigger fan of Solana longer term. Because deep in projects like Helium is going to be adopted worldwide with free phone plans. You're not going to be able to separate yourself from crypto or Solana because of us.
Bitcoin?
There's a Bitcoin maxi.
That's a good one as well. So the next question also, bull market in 2025 or nah? What do you think?
I'll start. Donald Trump.
Trump, yes, yeah.
He's going to make crypto great again, guys. We'll see.
I mean, we should not. I mean, always rely on Trump, but anyhow, yes, I still believe. I mean, this year, it's still there will be a bull year, especially for Bitcoin for sure, right? So for the altcoins, we have to find out a real stories. Not only meme coin or anything else, right? So we have to find out that thing, and it will be a bull market coming soon. Yeah.
Yeah, we think bull market, definitely bull market, and I think the period for bear market will be very intense and short. Yeah.
I focus on stability.
Okay, I got you. So, and the last question, the key tech trend that will unlock the next billion user?
AI, of course, right? I mean, there's nothing else other than AI. I mean, AI is everywhere, right? So I live in Palo Alto, so I meet AI guys everywhere, right? So it's like they are like massive things, yeah. So
You live in Palo Alto?
yes,
Do you have the Helium free phone plan?
yeah.
You should get
Yeah,
it.
of course I know that. Yeah. I heard that. Yeah. Okay.
Yeah, we think it's AI too. I think AI can fix like the distribution and the retention issue I mentioned at the first question. It will fix the broken mass adoption model. It will help new users to earn in crypto industry.
I actually don't think it's AI. I don't know if it's tech. I think it's more behavior and awareness. And I think it's very much like making sure that the token economic model beyond stable coins work in a utility. I think of myself as a utility token. And I think it has to work for every consumer. And that value, to me, has to be realized that it's just cheaper. It's easier, it's cheaper, it's better than the way it was, the legacy system. So this new approach has to be cheaper and better. And the value realization has to be all of you here. And maybe it's not just a token, whether it's USDC or HNT going up or down or whatever. But at least you know that the technology you have in your hands is better, it's cheaper. And while everything else is more expensive, this is not going to be more expensive. I think that, to me, is probably one of the most important things that gets overlooked, which is your personal budget, what you have to spend today, what you have to spend tomorrow. How do you get that money? How do you earn with USDC? How do you save money with Helium? Like, those are really important things that affect you every day, every month, every year. That's what changed the election in the United States, was that there was a guy there saying everything's too expensive, we're wasting money, we need to fix this. I think it's true everywhere, not just for us in the United States. I think it's true in all countries.
Regulation. I think what stands between a billion people getting online is trust and the right structure, and we're going to get that probably this year. Certainly in the major markets, Hong Kong for sure here with stablecoin bill, in the U.S. with stablecoin bill. There's already one in Japan, and Singapore will move. We already have it in Europe, so I think that's what's going to move the market.
Thank you for the answers. I think we can wrap it up. Thank you.
Thank you.
Thank you.
Round of
Thanks,
applause to
everyone.
our brilliant panelists.